Good evening, everyone. Thank you for tuning in today. Okay, before I start the webinar, I have to give some apology first because my camera is not working at the moment. So today I won't be showing my face lah. Okay, so today I'll be sharing on FX CFD trading, which is understanding the basic and benefit of CFD and the strategies used to trade Forex. Okay, let me do some self-introduction first. Okay, I'm Daryl and I have been with Phillips for around 2 years now. And if you have been tuning in to our past webinars, right, you probably have seen me or heard me before. Okay, so if you do not know, right, I am the night CFD dealer. So if you happen to call in the middle of the night or at night, right, you'll probably recognize me by my voice lah. Okay, so I hope I'll be able to share with you some of my knowledge today, and I hope you learn something and enjoy the webinar. Along the way, if you have any questions, please feel free to write your questions in the chat box below. Okay, towards the end, there will be a Q&A session and I will be answering to some of them. Okay, just like every other educational videos or webinar, right, there will be a need for a disclaimer. So this is my disclaimer. This presentation today is intended for general circulation only. Everything discussed today are all opinions. Please do your own research before investing. Should you need any advice, kindly consult a financial advisor or contact your TR. So this is the content for today. I'll be sharing on CFD, which is contract for differences, and also the types of CFD instruments and how people leverage and trade CFD, like our Forex CFD, and then the trading strategy and an introduction to Poem's MT5, which is our new launch. Okay. Okay, so what exactly is CFD? CFD, which also means contract for differences, right? CFD is a derivative product, which also means having a value derived from another assets. Okay, it's traded over the counter, traded via a broker-dealer network, which in this case is traded under Phillip. One advantage of CFD is that you'll be able to buy or sell, which means you can profit both at the bullish market and the bearish market. Okay, this is depending on the type of strategy you use, but you will not be restricted by any direction. Okay, when you buy one stock contract, right, you do not own the underlying assets, but what you're actually getting, right, is actually a contract. Okay, CFD is a contractual agreement between an investor and a CFD broker to exchange the difference in the value of the financial product between the time the contract is open and the time the contract is closed. So the difference you will be profiting or losing. Okay, so different country equities have different market hours. So if you hold past the opening hours, right, then there will be a financing charge. So what is the difference between a stock and CFD? One key advantage CFD have against stocks is that we have leverage, which also means that using lesser margin to gain exposure, which I will discuss more about it later. Okay, CFD allows you to go long or short, which also means that you will be able to profit from both bullish and bearish market. However, for stocks, right, if you are using our platform, okay, you will only be able to short or leverage, right, if you have a margin account and you must have a SPL account. And the interest is the same if you use our margin account to trade. So unlike CFD, right, you only need one account and you'll be able to leverage and short and also tap into other different asset classes, which is more convenient for a trader. And if you hold a CFD overnight, right, there will be financing charges, whereas the stock there isn't a financing charges lah. Do note that when we purchase a stock, right, we own the stock. However, for CFD, right, it's just a contract. You do not own the underlying stock. What you're getting out there is just a contract. Okay, this is just a brief advantages of CFD. And for today's webinar, I'll be briefly explaining on CFD. So for more information, please do your own research or read them up or wait for our next upcoming webinars. Okay, So for CFD, right, we'll be able to long or short. Okay, we'll be able to go two direction and we are not restricted by any market directions. Okay, and when we think that the stock will go up, we can buy, and we think when the stock will go down, we will short the stocks. Okay, we are not restricted by any market directions. Next, we have leverage, which also means using lesser money to own more contracts. Unlike stocks, you have to pay the full price for the stocks. Okay, and CFD allows you to tap into multiple asset classes such as forex, indices, equities, and commodities. Okay, and also CFD is also used for hedging purposes. Okay, so people use hedge, right? It's like to buy an insurance. So in the event, right, of anything bad were to happen, right, at least the portfolio is protected. Okay, so using these candlestick chart as an example to explain on how you can trade in two directions using CFD, right? Whenever we think that the market will go up, we can click on a buy position to go long and take profit at the top. Okay, or whenever we anticipate that the market is starting to fall, then we can immediately short the market, and yeah, we can actually take profit at the lowest lah. So we are not restricted by any market directions and can profit in both market. Okay, so moving on to leverage. By now you'll be wondering, you should know that CFD is actually traded on margin. Okay, using the power of leverage, right, we'll be able to take on larger positions using lesser initial deposits. With leverage, right, we can amplify our gains. However, do note that leverage is a double-edged sword. Okay, we can also lose a lot more if the market goes against you. So one reason why people use leverage, right, is because we do not have large amount of money to diversify our portfolio or gain exposure. So what we do is we tap onto CFD, right, to gain exposure. Okay, so let's compare, right, the differences in terms of money. Okay, let's say we want to long 100 company ABC at $100 for this counter. Okay, the initial margin required is 10%. So for stocks, right, in order for you to hold 100 at $100, right, you need 10K. However, right, using the leverage of CFD, right, you only need $1,000. So using these $1,000, right, we will be able to gain exposure of a $10,000 contract value. So how can we amplify our gains or losses? Okay, so for gains, right, if the stock goes up to $150, okay, we'll be profiting $50 per share. So for stocks, it will be a 50% gain. However, for CFD, right, we also be profiting the same. So 5K, but we are actually up 500%, using $1,000 to profit $5,000. Okay, so let us hear about the bearish side about it. Okay, when the market goes against you, right, so ABC company went down to $10, went down by $10. So we will be losing $10 per share. However, for stocks, right, we will be only be down by 10%, which is $1,000. Okay. However, for CFD, right, we'll be down $1,000, and that's 100%. So this is why we say that leverage is a double-edged sword. They can amplify your gains and your losses. So let me show you how much you can leverage on each counter if you use our platform. Okay, so using our platform, using Apple as an example, right? Let's say we want to long 100 Apple at $170. So when you launch the order ticket, right, okay, you'll be able to see the gross contract value, margin requirement, and the long short financing charges. So over here, right, you can see that the margin requirement is 10%, which also means that in order for you to hold 100 Apple contracts, right, you need around 2.3 Singapore dollars of margin to purchase the contract worth of $17,000. Do note that different counters have different margin requirement and financing charges. Do make sure you check before placing an order. Okay, so these are the different types of CFD instruments. Okay, we have equities, where we offer CFD and CFD DMA. We have commodities which are mainly in oil, gold, silver. Indices are like S&P 500, US Tech, Wall Street Index, and many more. There are even mini contracts for indices. Okay, so for Forex, right? And lastly is also the Forex. Okay, Forex is a global marketplace for exchange of national currency. As you can see from our title of the webinar, right? Today I'll be focusing on the FX side of CFD. Okay, if you wish to know more about the equities, commodities, indices, right? Do stay tuned for our upcoming webinar. Okay, we may be doing on this next lah. Okay, so now let's talk about Forex. What exactly is FX? Okay, I believe we all been to a money changer before, and we've seen many numbers with different country flag on the screen. Okay, so to make it simple for us to understand, right? Today I'll be using Singapore and Malaysia ringgit as an example. So if we were to go to Malaysia, right, we need to exchange some money first, okay? And you can see that the quotation on and you will see the quotation on the money changer. So the quotation is 3.4128. Meaning to say, right, 1 SGD, right, can be exchanged for 3.41 ringgit. So if you want to change 100 SGD, right, okay, we will technically receive $341 worth of ringgit. Okay, so in this example, right, Singapore dollar is the base currency, and the term currency, right, is the ringgit. Okay, we know that 1 SGD can be exchanged for 3.41 Malaysia ringgit. Okay, so these are some quotes that I gotten from poems. Okay, and these are some common few pairs lah. Okay, definitely there are many more forex pair. We have more than 30 over pairs, and just for today I'll be showing on these commonly traded pairs. Okay, we must always remember, right, the first currency is our base currency, and the second currency is our term currency. So when we enter a buy or sell trade, right, we are referring to the base currency, and an opposite transaction takes place in the term currency. Using the first row as an example, right, Euro and USD as an example, okay, Euro is our base currency and USD is our term currency. So if you were to refer to the base and term, right, okay, using these codes, right, you immediately know that 1 euro, right, can be exchanged for 1.09 USD. Okay, whereas the next one, 1 euro can be exchanged for 158.88 yen, and 1 USD, right, can be exchanged for 145.522 yen, and 1 pound can be exchanged for 1.27 USD. Okay, so when you enter or sell trade, right, when you enter a buy or sell trade, right, we're actually referring to the base currency. Okay, so an opposite transaction takes place in the term currency. Okay, for example, using this example, pound USD. Okay, so pound is the base currency here and USD is the term currency. So for example, right, if we were to buy or take on a long position for pound dollar, okay, we are technically buying the pound, selling the US dollar. So what we want to do, right, in order for us to profit, right, is the pound to strengthen and the USD, right, to weaken. Okay, so let's say, right, we are in a short position today. Okay, then for us to profit, right, the pound, right, must weaken and the USD must strengthen. Okay, so something to take note, right, is we have this FX CFD rollover swaps. Okay, FX CFD positions, right, that are hold overnight, right, okay, there will be a rollover of the spot FX underlying. Okay, so the swap points, right, will either be gained or lost. Therefore, the interest earned on the currency bought and paid on the currency that is sold. Okay, the net interest returns from the underlying spot FX positions, right, will be credited or debited from the customer's accounts, right, in the form of swap points adjustments. So if you're wondering, right, how can you find out more about the swap points? This is the FX CFD Heat Map, right, where it helps you to identify the trends of different FX pair based on the past data. You can find it under Phillip CFD website, and it's under the research and tools and FX swap heat map. Okay, so if you are there already, right, then you can you will know that the darker the color means the more positive or negative the swap points is. So you can see that blue is positive and red is negative. As from this current screen, right, okay, we can tell that the euro yen, right, is actually the most positive swap points based on it's the most positive swap points lah. Okay, so if you use our platform before, right, or planning to use, right, based on our platform, Poems allows us to access to more than 30 major global forex pair, and it tracks the performance of the underlying spot forex, and the margin is as low as 5%, which is 20 times leverage, and the minimum contract size is 10K of the base currency. Okay, and there are zero commission for every buy and sell you make with forex, no finance charges, no FX price. We offer competitive spreads too, and you can able to access to more than 30 major global forex pairs, and we have various platforms to trade like Poems, Mobile P2, MT5, and Mobile MT5. Okay, so enough of all the fundamentals about forex, right? Let's talk about how we can make a successful trading plan. Okay, personally, I follow this flow lah. Okay, so for a start, right, definitely we must come up with a trading strategy. What kind of trading strategy we want to follow? So trading strategy can be using moving averages, candlestick movement, trend lines, support and resistance, and many, many more. Okay, right after we choose the trading strategy, right, we need to stick with this strategy, right, for all our trades. Okay, then we can plan our risk. How much risk are we willing to take on per trade, and will the risk to reward, right, be worth the risk? Okay, the last step would be reviewing our trading strategy. Was the plan successful? Did I make money out of it? So, or rather, what really went wrong? How can we improve from it? Okay, so do track your trades, right? Like every trade, for be it a profit or loss, right, you also have to write it down one. So when you write it down, right, you will be able to find out that, oh, actually this strategy is working, that strategy is better. Yeah. Okay, so there are many, many different types of trading strategies, right? Okay, these are more like indicators for the strategy. Okay, however, right, do note that today, right, I'll be only briefing touching on the different types of trading, different styles of trading. Okay, please do your own research before trading, and definitely read up more on this strategy before trading. Okay, just a few minutes of me presenting, right, doesn't guarantee that you will definitely earn money. Please practice it more and get yourself familiarized with the different types of trading strategies, and know what strategy works best for you. Okay, so for one of the most commonly used strategy, right, is the simple moving average. So from this chart, you can see the blue line. Okay, that blue line move very closely to the green and red candlesticks. That is the simple moving average of 20 days. Okay, so what some trader do, right, is that they will monitor the moving average. Okay, and then they will understand, right, whether this pair, right, is sensitive to the moving average or not. Did they respect the moving average? Okay, so using this example, right, we can see that whenever the chart is near the moving average, right, there will be a rejection. Okay, we can see based on the circle area, okay, whenever they touches the moving average, right, then immediately they will be rejected. Okay, so trader can use the moving average, right, to take on positions. So when it touches the moving average, then maybe you can take a short or long position and then earn that bit of money lah. Okay, earn the rejection money. Yeah. Okay, so moving averages, right, can also be used to determine the overall trend. Is it a bullish market or a bearish market? Is it an upwards trend or downwards trend? Okay, so the next one, right, is trend line. Okay, trend line is also another common use indicator, and trend line is easily recognizable. Okay, all we need to do is we can draw a line on the chart and connect those price together. And the clear line, right, will give us a clearer direction of the FX pair movement. Okay, same thing, whenever it touches the line, it bounces up. So it clearly tells us that this is an upwards trend. Okay, so if I'm trading this pair, right, I'll probably take on long positions, right, when the pair is near the trend line. Okay, so the next one is support and resistance. So the green line is the resistance and the red line is the support. Okay, the resistance level, right, is where the price normally stop rising and dips back. Whereas the support level, right, is where the price stop falling and bounce back up. So from this chart, right, we can see that the FX pair, right, respect the support and resistance. Okay, whenever it touches the resistance, it fall backs down. Whenever it touches the support, they will go upwards. Okay, so same thing, if I spot this kind of chart and I will take on two different types of positions for this chart lah. Okay, I'll take a long position at the support level and also a sell position, a short position at the resistance level. Yeah, so also there are also some important candlesticks which traders should know. So traders should use these bearish candle patterns, right, to identify themselves, to identify the trend themselves. Okay, these usually tell the trader that this pair is in a bullish trend and this may be a start of a bullish trend. Okay, it may be also a reversal, so this is something that a trader would look out for lah. Okay, so for today I won't be covering these candlesticks, but what you can do during your free time, right, is to read up more about it and also try to practice more about it. Yeah, so you can also use our MT5 account as creating a demo account to practice out this trading strategy. Okay, so these are also some bearish candlestick patterns, which I think is important for us to know. And this is usually what traders do, right, to understand, to see if this is a bearish trend or a start of a bearish trend. So we have the hangman, bearish engulfing, and evening stars. Okay, due to time constraint, I also will not be explaining this. So please do your own research and read up them during your free time. Now let's move on to the risk side. Okay, so next we have the risk. So the risk, right, is more like a risk to reward ratio. So how much, right, do the trader want to earn for taking every dollar they risk for the trade? So definitely we want to risk the least to earn the maximum reward. So if we were to look at this risk to reward table, right, okay, do we want, for every trade, right, we are only risking $10. Okay, do we want to be rewarded by $100, rewarded by $10 or $5? Definitely we want to risk the least and maximize the reward. Okay, so if let's say if we are risking $10 for a reward of $5, will you take on that position? So personally, right, I will not take on that position because the risk is not well compensated. So in many cases, right, traders tend to find their ideal risk to reward ratio, right, is around 1 to 3. So in short, for every $10 that they are risking, right, they want to be rewarded by $30. Okay, so lastly is our trade performance and review. We need to track our own trades, like what I mentioned earlier on. So then we will know that what went wrong, how can we improve on it? Or rather, what went well, how can we continue to strengthen it? So we can repeat the whole process and work on our strengths and weaknesses lah. Okay, so if we have a good trading strategy and a good risk management, right, we will definitely be able to make money trading. Okay, so next one, right, is order types. So order types, right, also plays a part, right, plays an important part if you want to trade on Forex. Okay, so these are the common types of orders, right, that I will be focusing on today. So these common types of these order types, right, can also be used for other CFD instruments, but yeah, these are the common few lah. Okay, I'll be sharing so limit order, which also means that to buy or sell only at a specific price or better. Okay, there is a minimum or maximum price to be paid or received to execute your trade. So apart from taking on positions using limit order, right, you can also use limit order to set your take profit or stop loss. As shown as the example above, right, you set a limit price, right, the price will only be filled when it touches the limit price. Okay, let's say you want to open a position on Euro USD. Okay, the first thing you do is you can click on the order types, choose limit order. Okay, since I want to long Euro USD, right, then I choose buy. Okay, and I only want to enter one, and when it is at 1.09, so I type my limit price 1.09 and I click buy. So the order will be in the queue, and you will only buy this, right, when it reaches 1.09 or better. Okay, so the next one, right, is stop limit order. So it combines the feature of a stop order and a limit order. Once the stop price reaches, right, the stop limit order becomes a limit order to buy or sell at a specific price or better. Stop limit order is not guaranteed if the price gets through the limit price. Okay, this is usually used to exit an outstanding positions, more like a cut loss. So how do we use the stop limit order? Okay, let's say you are already in a position and you want to cut loss if the market goes against you. So you can use a stop limit order for your stop loss. Okay, point A is our stop price, point B is our limit price. Okay, so once the stop price reach, right, okay, the stop limit price becomes a limit order to buy or sell at a limit price or better. Okay, so using this example, okay, since the limit price is lower than the stop price, then your positions will be filled at a better price. So this is how you can set right, if you have a long positions for Euro USD and you want to cut loss, or not more like cut loss, you want to set a stop loss. Yeah. Okay, so the next commonly used orders, right, is one cancel others, OCO order. Okay, this is an order, right, simulating that if one order is executed, right, the other order, right, will automatically be cancelled. Okay, so the OCO order, right, consists of three parts. The first one is the limit price, which is the take profit. Okay, the second one, which is the stop price, and the third one is the stop limit price to cut loss. Okay, so how it works, right? When you already have a positions, right, and you want to place a take profit level and also a stop loss level. Okay, so when the market goes in your favor, right, you'll be able to take profit. And then if the market goes against you, right, then you will also not suffer a huge loss. So if let's say you take profit, then your stop loss will be cancelled. Okay, however, if let's say you kena the stop loss first, then your take profit will be cancelled. So it's like one cancel the other. Okay, so let's say, right, you already have a position and you set a OCO order. So you have a long position, right, in the red circle, point C. And you set your take profit at point A and your cut loss at point B. So after some time, right, the market goes with your favor, it triggers your take profit at point A. Then once you take profit, right, okay, immediately the stop price and the stop limit price, right, at point B, right, will be cancelled. Okay, let me give you another example. Okay, let's say you already have an positions in the red circle there, okay, at point C, and you place an OCO order. So you can either take profit at point A or cut loss at point B. So after some times, right, the market goes against you, it touches the stop price and hit your stop limit price, okay, and automatically you'll be cut loss, okay, you'll cut loss at point B, and now your your limit price to take profit at point A, right, will be cancelled. So this is how the OCO order works. It's one cancel others. So this is how you can set your OCO order. Okay, so this should be the flow of a successful forex trading. Okay, so the first thing, right, we need to do is we need to be familiarized with the particular pair, and we need to understand, right, if there is any news, right, that will be affecting the pair movement. Okay, such news can be FOMC, non-farm payroll. So some traders, right, like to trade with the news, while some traders, right, hate to trade with the news. So this is entirely up to yourself and your trading strategy. Personally, I like to avoid trading with the news. So if there's a news happening today for this particular pair, right, then I will probably take a break. I wouldn't trade this pair and probably trade on another day, right, when there is no such news. Okay, so the second thing, right, is we need to analyze this pair based on the technical analysis, such as the trend line, candlesticks, moving averages, and other indicator. So depending on the type of indicator you like and is suitable for your own strategy. So personally, right, I know a few traders, so they all have their own unique developed strategies. So one of them use a mixture of Fibonacci retracement and candlestick, while the others just use supply and demand, while another one just monitor based on the candlestick movement and based on the level on each particular pair. But then, however, right, at the end of the day, right, okay, their strategies still work for themselves. Okay, so at the end of the day, you still have to figure out what is your strategy and what works best for you. Okay, so um once you determine your strategy that you want to use, right, okay, then you have to stick with that strategy and do your own research lah. Okay, and if you do your own technical analysis, right, the technical analysis tell you that, okay, this particular trade I have to go for it. Then after which, right, we will find an entry for this pair. Okay, so based on our technical, right, which level should I enter into this trade? Okay, what is my entry point for this trade? Okay, can it be at the a simple moving average, or can it be at my support level or my resistance level? Okay, so if let's say I were to enter this trade, right, what would be my stop loss and what would be my take profit? Okay, you can use different types of order, like what I mentioned earlier on, to set your stop loss or take profit. So after you determine your stop loss and your take profit, right, okay, then you must ask yourself that, is the risk to reward worth it? Like mentioned earlier on, how much are we risking, right, to get rewarded? Okay, so what is our stop loss? What is our take profit? So assuming, right, our stop loss is $100, so we are actually risking $100. So our take profit, is it $200? Is it $300? Okay, is the reward about 2 to 3 times? Okay, so personally, right, I like to get rewarded at least 2 or 3 times, and the more the better lah. Okay, then I will consider this trade. If the reward is the risk to reward, right, is not there, then I'll probably skip this trade lah. Okay, so if everything aligns together, right, the moon, the stars all align together, then I will execute this trade. Like there is no news and the technical analysis prove that I should enter this trade, and the entry is at, for example, at my trend line, and my take profit is maybe 3 times away, and I only risking 100, but then I'll rewarded 300. Then yeah, all these things align, right, then I will execute this trade. Okay, so there are many times, right, if the moon and stars align, however, right, we still miss the entry, right, do not worry, because there are still a lot of opportunities. So do not get affected by it, don't get too emotional, too FOMO over it, or okay, there are always trade for another day. So do not trade with your emotions. Okay, so if you do not know, right, we have recently launched out MT5, and this is something new for us and to some of you. Okay, those who have used MT4 before, you probably have heard of MT5 and is familiarized with the interface. MT5 is created by Meta Codes and is the successor of MT4. Okay, and this is a very popular this is popular among trading professionals, and is available in both desktop version and is mobile friendly too. So this is the summary of MT5, okay, where the commission rates are lower if you use MT5. Okay, you can refer to our website for the exact rates, okay, and there's also the auto cut loss function, and system will auto cut will auto close out your largest unrealized loss position first. Whereas for counters, right, we are currently working to add more counters. So if you have any counters that you are interested to trade, okay, but you do not find them in our MT5, right, then do feel free to call your TR or call in our dealing desk so we can assist you. Whereas for ledger, right, in poems you can convert your SGD into foreign currency to trade. Whereas for MT5, right, the system will only hold the margin required in SGD. For example, right, you want to trade Microsoft contract, which is 10% margin requirement. Okay, so the initial margin, right, should be around 100 USD. So MT5, right, will only hold SGD equivalent of USD 100. Yeah. So when you make a profit, okay, the USD 100 profit, right, will be converted into SGD and credited into your account. So MT5, right, is famous for their one-click trading. Okay, it is buying and selling just by clicking on the button. Okay, just by one click lah. Okay, just by clicking on the buy or sell and setting the quantity, the order will be executed. Very convenient and easy to use. Whereas for advanced order type, right, there are more order types, and it allows you to set your stop loss and take profit at the same time. And lastly, you will be able to hedge mode. Okay, you can able to take on long and short position at the same time. So how can you open a Poem CFD or MT5 account? So for our existing customers, right, you can create a CFD account here and you can opt in MT5 here. So for new customers, right, you can create an account via poems.com.sg and follow the steps. Alternatively, you can call your TR or walk into our Phillips Investor Centers. Okay, we have quite a few locations. Okay, you can also scan the QR code today to create your account. Okay, alternatively, you can locate us. We have quite a few locations. You can find them in our website. Okay, so for those who wish to try out our MT5, okay, using a demo account, so this is how you can do it. Okay, this is how you can create a demo account at our website. Click on the demo, then you follow their instruction, put your name, your mobile number and others. So after you fill in your personal details, right, there will be an email sent to your email for the six digit code to verify your account. So you can enter the 6-digit code to verify your account, and otherwise then once you enter, right, okay, you will create the account already. Okay, otherwise you can click on open an account to open an account with us lah. Okay, so for those of you who do not know, okay, currently we are having a FX promotion, and this is our promotion, and the promotion is ending on 29 September. So let me share with you how you can earn up to $360. Okay, but however, okay, so the promotion, right, is ending in September. So what I meant by 360, right, is August 120, July 120 cash credit, okay, August 120 and September 120. However, right, for those who are wondering, right, do not, if you already missed July and August, right, not to worry, you still got 120. You are still able to achieve the cash credit vouchers, cash credit, right, from at the month of September. Okay, so all you need to do, right, is execute 8 FX trades, right, and you'll get $20 cash credit. Okay, and if you execute another 28 more, right, 28 more FX CFD trades, right, then you will get another 100 CFD cash credits. So in total, right, you'll be able to get you're able to get 120 CFD cash credits. So I hope that you'll be able to get the 120 from us. And if you are wondering, you miss your July and August, don't worry, September is starting in a few more days time. So please get your 120 cash credit from us just by trading 8 FX trades and 28 more. Okay, so this is the Q&A time. Okay, do you have any questions for us? Hi, Jaya. SG stocks have CFD. Yes, there are CFDs. There are CFDs. I mean there are SG stocks in CFD. Yeah, you can check in our website lah. Yeah, we also offer DMA, so you can find out more about it. Okay, so someone asked, right, can I can I hold a buy and a sell position. So I believe, right, what you are asking is, can you long, if I were to give you an example, right, I believe what you're asking is, can I long 100 dBs and short 100 dBs? So if you are using poems, right, your position will be closed out. However, right, if you are using MT5, right, you will be able to hold 100 dBs long and 100 dBs short, okay, because we allows you to hedge and you'll be able to open both positions at the same time. Hi Jaya, CFD have micro lot 0.1 lot. For CFD do not have micro lot. But do note that for SG's stocks for CFD, right, it's all in 100 lot size. Okay, so someone also asked, I just started trading CFD and I could not find some counters inside poems. Okay, so what I can suggest you to do, right, is to call in our dealing desk and let us know the counter you wish to trade. So we will try our best to cater to it. Okay, so same thing like what I mentioned earlier on, for MT5, right, if you cannot find the counter inside, right, then you can call us, okay, then we will try our best to cater to it, and we can try our best to facilitate it to offer to you. Okay, so due to time constraint, right, I'm actually ending the webinar already. Okay, so if there is some questions that are not answered, right, okay, you can actually find your your question here, or you can actually read our info fact sheet, okay, where we will give where it provides more information lah. Okay, okay, otherwise, right, you can always call in our dealing desk. Okay, so our dealing desk is over there. Okay, so thank you for coming. I'll see you all for the next webinar. Thank you.